bring in our guest, Jim Kelleher, who reiterated his buy on Dell after these results. He's a Bloomberg best. And Jim, you know, let me just pose that simple question to you. I mean, what has Dell done right that HP has done wrong to illustrate, to have seen this action in the markets?
Well, good morning. Well, one thing you do need to remember is Dell has been down for so many years and so disregarded by investors that it's coming from a low place.
Yes.
And it's building up, whereas HP has been sliding steadily from a position of strength. But in terms of the recent quarter, what Dell has done right is they really are executing on Michael Dell's strategy of selling more high-end gear, more servers, more storage equipment, selling into a better class of customers, a higher quality gear. In terms of their what they call their client business or their PC business, what they've really done is bring some both cost discipline and price discipline to bear. So they are selling, again, selling to a higher end customer, less consumer, more corporate. So those two things are the key drivers, I would say.
Well, Jim, when it comes down to the key drivers there is that business or enterprise side versus consumer side. Which side has the better margins? Because we talk so often about which side really drives profit growth here. What is it for Dell?
Well, Dell has done great in reducing its consumer exposure. First of all, it's down to about 20% of revenue in the most recent quarter. And consumer was really running at about a break-even level a year ago, a 0.5% operating margin. And they really kind of surprised this time, getting up to almost 5% in the operating margin on consumer. Now, the consumer business will always lag, but it is an important business for Dell. It gets people into Dell PCs that they then are happy to use in the corporate space, because we are in that era in which, as you well know, the workspace and the consumer space blend so much. So I think it's important for Dell to stay in the consumer space, even though it's inherently lower margin. That said, the margins in consumer are much better than they were a year ago for Dell.
Jim, I think we've got a chart here that I just, because you were mentioning early on about the stock, how the stocks have done. And Dell, which actually over the last 12 months has gone up 6%. You've had Cisco down 32% and HP down 21%. So you can see that big divergence. From that, the question is, how does HP and Cisco, how do they close the gap there?
Well, again, they began from higher places, and they began as a much higher margin businesses, and both have seen a lot of margin pressure as commodity-type vendors come into some of their core markets. And the problem for both is that they kind of overreached, both John Chambers and Mark Hurd in his final days, buying lots and lots of assets and maybe taking their eye off the ball of some core businesses.
So essentially, they went too far with acquisitions, and Dell was much more targeted then.
Dell was much more targeted. But I believe, so to your question, how do they get back on speed? All three of these companies are attempting to execute something very difficult, which is to move the traditional enterprise environment into the era of virtualization, into the era of convergence, and into the era of the cloud. And what HP is finding, I think HP was in their services business, they kind of starved that services business, focused too much on IT outsourcing, which is pretty much becoming a commodity business. And when you want to get into the high-end parts of that business, is like applications and business process outsourcing, you can't cost-cut your way to that stuff. You really need to bring in very good people and build replicable processes for getting to cloud and getting to virtualization. So it's going to be a tough slog for both these companies.
Hey, Jim, let's put Cisco aside just for the time being here. Let's focus on HP and Dell and other, you say, computer makers out there. There's a huge concern among a lot of analysts, a lot of traders out there, that tablet computing is the next evolution, the next game changer out there. And no matter what Dell or HP can do, if Apple and these other tablet computers gain more market share, PCs become less and less relevant. What do you think about that?
Right. Well, both of these companies have a tablet product, and they're trying to get in there. What's interesting right now in the market is iPad is so obviously superior that they've created what we call tablet inertia, and there's lots of tablets coming out, but people are kind of paralyzed to make a decision. So in the very near term, tablet sales actually surprised on the downside. But you're right, it's a coming concern. And all of these companies have competitive product that they hope to play there. All are going, I mean, everyone who's not on the iOS system is pretty much is going to pretty much try to get on Android. Now, HP is the exception. They want to go with their own web OS that they got from Palm, and that's another, that's a real step into the unknown for them. We'll see if they can get a viable product out there.
Jim?
Yeah,
Go
yes.
ahead. Let me just let you finish that.
I was just saying the tablet market is certainly going to accelerate out of this current period of what I'm calling tablet inertia, but if you don't participate in there, I think the low-end mobile PC will definitely be replaced by, what you can call the clipboard PC or the tablet.
Okay. Jim, thank you. Really appreciate you joining us. Jim Kelleher, Bloomberg
Thank
Best
you for having me.
Director of Research at Argus.